Alright, good morning for this Tuesday, May 7th. And let's see, look at the markets actually opening up higher again today. So if you recall on yesterday's video, I was looking for a potential inside pattern where the market wouldn't be able to take out Friday's high or low. If that were to happen, I would be looking to short the market today if the market were able to penetrate down through the low. But as you can see, the market made a higher high. It actually took out the high. So we took out that high by a full point to 16.15 and a quarter on the E-mini S&Ps. That's what we're looking at right now. And the market's actually opening up higher than the high today. So if we look at a Globex chart on a 3-minute chart, all we did last night, the market traded higher. All last night, the market trended nicely. Remember, it closed at 16.13 and a quarter and traded up. Made a high last night of 16.17 even. So we're hovering around that area right now. So let's go back to the daily chart here and show you. So basically, the trade that I outlined yesterday in terms of looking to buy the VIX or buy the SDS, in terms of if you think the market's going to go down in price, you would buy either the SDS, which is a reverse index fund of the S&P 500, or you'd buy the fear index, the VXX, and that would go up in price as the market came down. All right, so those trades are null and void now because of the market not being able to create that energy that I was looking for, which would be that inside pattern. Okay, so we don't have that. There's nothing to look at right now. I mean, of course, if today, okay, let me point out another potential trade. Since the market has already taken out yesterday's high, the 16.15 and a quarter has been broken to 16.16 and 3/4. Okay, if the market reverses down through yesterday's low, that would be a shorting signal for me. Now it's short term. But think about this. Since the market has already taken out yesterday's high, if the market's able to reverse back down and take out yesterday's low of 16.09 and a quarter, so I would need to see a 16.08 and 3/4 print, that would be a short, because think of it. That would then create what we call an engulfing pattern, right? Or what I like to call as well as an outside vertical bar. And all that is it's the opposite of an inside vertical bar. So we're an inside vertical bar here. So an inside vertical bar is when the market is not able to take out the prior bar's high or low. An outside vertical bar is just the opposite. That's when the market takes out the high and the low of the prior bar, whether that's an intraday bar or a daily bar. So that's a really good reversal pattern at a high or at a support level in an established uptrend. So since today has already been able to break up through yesterday's high, if the market reverses and takes out yesterday's low, then I would think at that point, if that were to happen today, I would think the market would come down and at least test Friday's low of 16.05 and a half. So basically, if the market's able to drop down from this point and take out yesterday's low of 16.09 and a quarter and trade down to 16.08 and 3/4, I would think the market would at least come down and test 16.05 and a half same day, and then start to try to do start trying to fill that gap. Okay, let's take a look at Baidu, BIDU, the market I pointed out yesterday. Like I said, I'm looking for a bottoming pattern in this stock. The market has retested these lows a few times here, and now we're on the way up, so we're even higher than we were yesterday. Another one I'm looking at is NOXX, Onyx Pharmaceuticals. Again, we're trading down at that 50 exponential moving average. We got real close to it yesterday, and I'm looking for this market to start trading higher. Again, if you take it a step further and you draw the Fibonacci retracements from this low up to this high, the market also was trading right down at the 38.2% retracement, about 89.39. Right in this area should provide support. Okay, and so that's what you have right now. That's what I'm looking for. So let's go back real quick to the E-minis. Again, look at, we are trading again. Look at 17, 17 and a quarter. 17 and a quarter is the high today. So let's flip it to an intraday chart right now. All right, here we go. We've got an intraday chart up. This is a 3-minute chart, and I've got pivots. I use pivot numbers for day trading purposes to take a look at those. But what I typically do is I typically wait for that first half hour to give me some type of bias. Okay. Some type of bias to the day. So I look for that first half hour's range, the high and the low of that first half hour, and wherever the market is able to break to, either up through the first half hour's high or down through the first half hour's low, gives me a bias and direction for the day. So that's what I'm pretty much looking for. So far the market's only been open for 7 minutes, so it's a little premature, but you have to keep in mind we are right now in all-time new territory, and we have not been able to fill that gap from Friday's close to yesterday's open. So we've got an exhaustion gap. So the market's extremely strong. Now I know the market's extremely extended, but markets can stay irrational and stay extended for a while, far longer than most people think, and that's why people get crushed in a scenario like this. So you just got to go with the flow, and you got to trade the trend. We're making higher highs and higher lows on a daily chart. We're doing that now. So I would be looking to buy on pullbacks today after that first half hour. As long as we can break up through that first half hour's high, I would be looking to be a buyer. If the market cannot take out the first half hour's high today, but rather breaks down through the low, I would be looking to sell rallies. All right, so hope that helps. Doc is finally back with us. He's been gone for a couple weeks. He is back with us. I'm excited. Listen to his 10-minute video. It's a phenomenal video like always. Glad to have you back, Doc, and I hope everyone has a profitable day. Bye for now.